Behind me, people do important work so we don't lose the flow of the session. The Global Interdependence Center will soon be 50 years old. During its period of time, it has evolved from monetary and trade policy worldwide to a much larger agenda. And recently, it has been developing the College of Central Bankers. And I think we're now live, and you can see two more GIC members. One of them, the chair of the College of Central Bankers and a vice chair of the Global Interdependence Center, is Peter Gold. Hello, Peter. It's nice to see you on a screen. And I'm going to let Peter officially introduce my newest best friend, Kash. She is a fellow in the College of Central Bankers. And the College of Central Bankers, which Peter will tell you about for 2 or 3 minutes before we hear a keynote address, is a unique structure in the world. In earlier times at the Global Interdependence Center, I chaired the Central Banking Series. In those days, we didn't have to deal with these monumental financial shock issues that are confronting us today. We would go somewhere, we would have a nice meal, we would talk about central banking, we might talk about payments. No one wanted to hear about how payments were made. It was a sleepy subject. And then we'd have a nice dinner, a glass of wine, and we'd say, gee, Paris was wonderful, or Rome was wonderful, or Tokyo, or Singapore, or wherever we happen to be. That has all changed. And so what Peter can describe, Peter, maybe for 2 or 3 minutes before you make the introduction.
Sure.
What is the College of Central Bankers? How do we get such distinguished personalities, including our keynote speaker? And tell us for 2 or 3 minutes what's happening, and then we'll go to the program itself.
Thank you, David, and good morning, everybody. I come to you from the other sunniest states in the United States, Phoenix, Arizona, where yesterday was 99 degrees, but absolutely charming. So, yes, David, thank you. I want to thank you also, David, for your leadership in the Global Interdependence Center, and particularly in the College of Central Bankers. You are a true visionary and greatly appreciated. I also want to thank the University of South Florida, Dr. Karen Holbrook, who has attended and been part of and a partner on many of the Global Interdependence Center programs. We're delighted at the College of Central Bankers to join you this morning in this capacity as well. It's my duty to introduce our keynote speaker. But David has asked me, and I wanted to share with you a little bit about the Global Interdependence Center's College of Central Bankers. So formally started in 2018, and 2019 was the full operational year. We now have 19 individuals who we title fellows in our College of Central Bankers, each of whom has been the president, the governor, or on the governing board of a central bank or central bank type organization. The purpose of the College of Central Bankers is to do what this program is doing, which is providing a platform for thought leaders throughout the world. And we have various activities at the College of Central Bankers. One is a survey, and perhaps Bill Kennedy, our chair, suggested a topic for our next survey, which is just straight on interest rates, and see how our fellows feel about that. So we'll look at that issue. So surveying is one of our topics which we are trying to continue to mature. Another project is something we call the Institutional Alignment Project. And we are so excited to participate today because this topic falls within the institutional alignment project's footprint so squarely. That project seeks to look at whether these institutions, central banks, and similar organizations around the world are fully equipped to deal with the problems and opportunities as they are evolving. Now, remember, we started this project back actually in 2019, 2020, and matured it a little bit in 2020, where the major problems were the pandemic, debt levels, independence of central banks, interdependent of central banks, climate threats. And then in addition to those comes the war in Ukraine, Putin's war in Ukraine. So that itself, as you can imagine, and we'll learn more today from a true expert on this, what implications that has on central banks, central banking, and not only regional economies, but the world economy. We'll learn more about that. So this will now also come under our institutional alignment project. So that's the GIC's College of Central Bankers. We also have a very vibrant and robust advisory group, of which David Kotak and other audience members and panelists here today are, some of whom are members, and we thank them for their participation. And with that, let me get to my order of discharge for this morning, which is to further introduce Katarzyna. So Zajdel-Kurowska currently is an executive director of the World Bank Group, and she represents 9 countries, including Poland, Switzerland, Serbia, Azerbaijan, and 5 Central Asian states. She's a former member of the management board of Poland's central bank and former deputy finance minister. She has also just returned from Warsaw and on a mission, which I'm sure she can disclose aspects of it to us, if not fully. And her talk will also include implications of the war on Ukraine, neighboring countries, and our global economy, relief recovery, potential reconstruction efforts. For instance, do we need a new Marshall Plan or similar type of organization? And what are the impacts of refugees coming into places like Poland and other areas? And, you know, as we look at the economic global perspective, does this actually lead to the question of, do we need another Bretton Woods conference? And who would be invited to that sort of conference, and what would the topics be? So with that, if you'd like to learn more about the College of Central Bankers, please go to the Global Interdependence Center's website, interdependence.org. And I'm so happy to introduce Katarzyna, who, David, I join you and say, yes, she's a wonderful fellow in our College of Central Bankers, and thank you. The floor is yours, Katarzyna.
Thank you very much, Peter, and thank you very much, David. I would like to thank GIC and, of course, University South Florida for this invitation today. It's a great honor to be with you. I do regret that I am not with you in person, but we are just after so-called spring meetings of the IMF and the World Bank, and still there are a lot of meetings here in Washington. So I was unfortunately kept in here in Washington, but I was listening with big interest to 2 sessions this morning, and indeed there are a lot of issues that I would also like to raise and comment that you have already discussed in details. But definitely it's worth also to reflect them given the current situation. I was asked to give some perspective from Poland. I was recently, as Peter mentioned, I was recently, just a week ago, I returned from the mission I joined David Malpass, the president of the World Bank, in his visit in Warsaw to meet with the authorities, also to meet the local authorities as well, to see how the situation is on the ground, given the huge inflow of refugees. So I also would be happy to give you more feedback on that. Well, let me focus first on the implications of the war on Ukraine, neighboring countries, and global economy. Well, Russia's war against Ukraine has massive humanitarian consequences and detrimental repercussions for Ukraine. The economic growth decline in Ukraine itself is expected to be around 50% this year, due to huge deceleration of economic activity and infrastructure damage. Lives and livelihood are being lost. More than 10 million people are forced to leave their homes. Around 5 million people, mainly women, children, and elderly, have fled the country, mainly to Poland, but also Romania, Moldova, Hungary, and Slovakia, while the rest are being internally displaced. The refugee inflow into Europe has already exceeded that from Syria in 2015-16. So we have definitely unprecedented inflow of refugees into Europe, something that we could compare with the Second World War. Well, as I mentioned, I could visit Warsaw just a week ago or 2 weeks ago, and I have to tell you the situation is completely different as you could have been expected in other countries. For example, there are no single refugee camps in Poland. All refugees are accommodated to the private homes or hotels. So you don't see, like in the other refugee crisis situation, people fleeing to and kept in the camps. The refugees receive the full access to the labor market and public sector services, including education, health, and transport, which is also a little bit different than, for example, in many MENA countries where hosting communities, hosting countries are restricting access to the job market or to public services. So we have already seen that many kids are enrolled, Ukrainian kids are enrolled to school. People are actively looking for a job, but the number of refugees are definitely overwhelming. So this is already more than 2.5 million of people that they cross Polish border. As I mentioned, 5 million people that they fled the country. Many of them, of course, they are staying in the neighboring countries because they still believe that this war will end soon. But some of them, of course, they moved to other Western countries, US and to other continents. But majority of them are staying in Eastern and Central Europe. War pushed many of citizens to poverty. And the World Bank just recently published the report of the implications of the war and estimates that the poverty rate could rise to around 60% of population by 2023. 60%. It's incredible number, given that Ukraine is the upper middle income country. The war has completely disrupted Ukrainian agriculture. There was a lot of discussion also in the previous panel about the agriculture market and the food prices and the wheat prices. Ukraine and Russia are the world's breadbasket, and the war has triggered a wave of the steep price hikes around the globe and threatened to push another 50 million people to extreme hunger only this year. So we have extremely not only local implications, but we have definitely global implications. just to compare the numbers, the agricultural market plus food processing industry in Ukraine and trade is around 20% of the GDP of Ukraine. So you can only imagine why we expect such a huge decline of the economic activity. Well, the war as well as the sanctions imposed on Russia have significantly impacted macroeconomic developments in the neighboring countries and the global economy through direct and indirect channels. As Ukraine and Russia are major exporters of commodities, the war has triggered a further increase in commodity prices, especially food and energy. Also, there was a lot of discussion this morning about that. We see enormous inflationary pressure as a result of the food prices, currency depreciation, capital outflow, and this altogether forced many central banks to raise interest rates. So we have already noted that many central banks in Central and Eastern Europe raise interest rates. In Poland, the interest rates were raised already seven times as inflation has reached the highest level over 20 years. The war also triggered a spike in the risk aversion in the global financial market, which has a negative implication on the debt sustainability. We might see another wave of defaults. Many countries already pre-COVID and pre-war had the debt distress situation. So we might see more and more defaults. And with interest rates going up, we should expect that rather sooner than later. Trade routes and global value chains are disrupted. So this will have global implications. So we have crisis on top of the crisis. After 2 years of pandemic, the global economy faced another shock. Many international financial institutions revised down the economic forecast for the global economy, and all the post-pandemic recovery sets back. As I mentioned, we have just completed the spring meetings of the IMF and the World Bank last week, and both IMF and the World Bank revised down forecasts for Europe, for Central and Eastern Europe, for Russia, and of course for the global economy. So there was a question before this panel about the recession. I agree, maybe there will be no recession, technical recession this year, but we should rather expect a sharp hard landing going forward. Now I would like to focus a little bit about what should be done in the short term and the medium long term. Speaking about short term, I mean about the humanitarian aid. So only to address the dire situation and the humanitarian crisis, Ukraine needs about 11,000 tons of humanitarian aid per day. Food and medicines are in the largest demand, with almost 7 million of internally displaced people across the country. Access to food, water, and essential services is becoming severely constrained. To cover only social spending, pensions, and salary of the public sector, the country needs around $2 billion a month. Given the dramatic decline in tax revenues, the budget deficit this year will widen to around $20 billion. And without access to capital market, it will have to be covered by donors and international communities. There is no other choice. So it is essential to support Ukraine now in this phase, but also to give them hope for the better future. And the preliminary assessment of physical damage of buildings and infrastructure, including schools, hospitals, core energy, transport, water, sanitation, and telecommunication infrastructure could be as high as $100 billion. But I have to tell you that I have seen already many estimates with every day of war The number is, of course, rising. We have seen dramatic pictures from bombarded cities. So with every day, the number of the physical damage is going rapidly up. Hoping that the war ends soon, it's important to start preparations for recovery and reconstruction of the country. The new so-called Marshall Plan is needed to revive Ukraine's economy. Ukraine will have an opportunity to finally shake off some of the legacies of the past and leapfrog to a more productive, sustainable, and inclusive economy if the war is over. This will need a solid plan focused not only on reconstruction and rebuild of the infrastructure or housing, but on a strong institutional framework, which is crucial if Ukraine wants to become a member of European Union. Well, there was many visits to Ukraine with prime ministers, but also with the European Commission president. In the recent weeks, a lot of hopes and support a lot of support is promised, and it's raising hope for the reconstruction when the war ends. But we are still at the war, and we don't know how long it will take. But definitely, it's a right time to start thinking about the next phase. And I'm pretty sure that Ukraine will need a lot of resources. But given the lessons learned from pandemic, but also from the war, there is a chance that Ukraine can reconstruct, building back better. With that, let me turn again to Peter for your comments and questions.
Thank you so very much. Very, very thoughtful presentation, packed with a lot of information, and I'm sure our audience, both virtual and in person, has many questions for you. I just had one that I'd like to start off with. And recently, the International Monetary Fund released a joint press statement from the heads of international financial institutions and programs on the Ukraine. And it was very succinct in going through what each organization is doing in the Ukraine. And the EBRD is $2 billion of euro contribution. EIB is another $2 billion in emergency packages. CEB has 1.4 billion. The World Bank has now said that its financing part of the Ukraine will be targeted at around $3 billion package for immediate expenditures. If you were asked to prioritize the top 3 things or top 2 things that needed to be done as a global community, both to preserve the Ukraine and enhance it, but also for the global communities, how would you prioritize? What would those elements be?
Thank you very much, Peter, for that question. You indeed mentioned about what we have discussed last week with many IFIs about the coordinated support for Ukraine. But you dropped numbers, and I also mentioned in my presentation what are the needs assessment, and you can easily add the numbers, and you will see that Ukraine will definitely need much more money, even on the monthly basis, to survive and to still pay to the public sector and pensioners they monthly pensions or salaries. So what are the priorities? First, we need. So still, as I said, we are at war, so we still need to support Ukraine with humanitarian aid. They need a lot of resources, food, medicines, everything for the daily survival. But going forward, as I mentioned, there will be not only the reconstruction and rebuild, which would give Ukraine to focus on building a green, resilient economy based on what the new technology and the new situation brings to us. Given all this energy and food security discussion that we have around the globe, definitely we will have to reflect on how to accommodate those trends to rebuild of Ukraine that is so far interconnected with Russia and other countries in the region on food and energy sector. But definitely what is the most important for building strong economy that would be a viable candidate for the membership in European Union, we need to build strong framework and strong institutional capacities. Well, Ukraine faced a lot of issues in the past with corruption, with setbacks in many market reforms. So this has to be allowed. Deregulation of the economy, liberalization to allow market economy with strong institutional framework to build on this, to build those strong pillars. But as I said, now we should focus on the humanitarian aid, as this is extremely important on the daily basis, but still preparing for the reconstruction plan. For both, I mean, physical assets, but also for strong institutions.
Thank you. Thank you. So what I'm going to do is take a few virtual questions. Then we're going to go, hopefully, Kelly, you can help us with this, go to the audience for some questions. But virtually, there are a few questions that come up. So let me try to put them together in this way. There has been, as you noted, a mass exodus out of the Ukraine to neighboring countries and other countries. Does a country such as Poland, a host recipient country of immigrants, does it need, and they need, some sort of financial aid? And what should the world be doing vis-a-vis those countries in consideration of this fact?
Thank you very much, Peter. Of course, yes, as we are hosting more than 2.5 million people in the population of 38 million size country, definitely it means that every fifth or sixth person in Poland already is from Ukraine. And these people are mainly women, children, and elderly people, so they need access to the public service and job market. So definitely, yes, this is a burden, fiscal burden on all neighboring countries. I have seen some estimates that if the war continues and we will still keep the same number of refugees, so not more, Poland might need around 11 billion euros till the end of the year. 11 billion euros, which is around 10% of the annual budget. It is really a lot of money. But if we add all other countries, Romania, Moldova is in very difficult situation because this is a small country outside the European Union with a huge inflow per capita. It looks like almost 10% of the population are already people from Ukraine. So they have enormous pressure on the fiscal situation. So definitely all these countries, particularly Moldova and the countries outside the European Union, they need immediate support to host refugees and support them.
Thank you. So my plan is to take one more virtual question, then to ask my friend David Kotak to perhaps coordinate the questions there in Florida. So another virtual question. actually, there have been a few on this. How will Poland cope with Putin shutting off natural gas? And what are the implications of that?
Well, this is a very difficult question. I have seen that the news yesterday, and I was shocked to see it, that Poland and another country, Bulgaria, was shut off the gas. I have seen reply this morning from Prime Minister who said that Poland has gas reserves at least for 2 months. So let's say some coverage for the short term, but you cannot replace that gas so easily within few weeks or months. Poland has already, over last years, prepared for the diversification of the energy sources. So the process has started long time ago. We have LNG terminals to get the liquid gas also from US and other countries, but this is not the capacity is not as large that could easily replace gas from pipes for pipelines, and this is really a problem. The good thing is that it happened now during spring summertime when the gas demand is much lower than during the winter time, but definitely emergency planning is needed. I also have seen many confirmation from the Polish government and other governments in the European countries that they are actively coordinating among themselves about the common European market and to support each other in that situation, as we are all together at war. Have implications of that war. So yes, so this is something that will require coordination, but also to speed up investment in alternative sources of energy. So when I was in Warsaw 2 weeks ago, there was a lot of discussion if this situation that we have on the eastern side, whether this will trigger the energy transition faster than it was expected before, whether we will invest more in the renewable energy, in the solar, or wind, offshore wind, and others. Yes, of course. The question is, of course, yes, but it takes time to build those solar farms, solar plants, or wind plants. So it will take some time.
Thank you very, very much. David, I hope you do this for us and come on and help us organize the question and answers from there.
Yes, thank you to both of you. We're learning our way here with a hybrid meeting in which the virtual section drives the meeting program. So, for example, Bill Hampton of USF and I have been in conversation outside of the cameras talking about the fact that what we didn't do is have a mobile camera. So when we have a questioner in this audience, everyone would be able to see the questioner. But we're learning. This is the first time we've done something like this, and we have several hundred people in total watching this. So let me ask the first question, which came to me from email, and it came from Vincenzo Sciaretta, who is a financial journalist in Milan. And Vince and I know each other for many, many years. We wrote a book together on Europe so long ago that things have remarkably changed since that. And he was my co-author on that book. Vince asks, and this is a general question, Kasia, so you take it wherever you think you are able to. If we're in a climate where interest rates worldwide are rising and central banks are changing policies and mostly tightening, and we have extraordinary gaps in interest rates. For example, the 10-year Chinese government bond yields today a lower interest rate than the 10-year US government bond. And the Russian short-term interest rate in rubles is 17% as a policy rate. How, I'm paraphrasing the email, how do you, in your capacity, and how do you see the responses because of the rising interest rates in this massive financing need in front of us that you and I spoke about on the phone and you have now seen? And whatever the estimates are, they're going to go higher. How do we deal with the interest rate issue?
Well, this is, David, thank you very much for that question. This is an excellent question. I think that many central bankers are now analyzing the situation, whether they should be quicker or slower with monetary tightening. Of course, the trend is obvious, in my opinion, because we see what's going on with inflation. So definitely it requires some decisions of central banks. But of course, investors are always looking at carry trade and gaps between interest rates. But there is always also in the kind of situation a kind of flight to quality, and investors, when they are concerned about the situation, they would rather pick the asset that is maybe not less profitable but more secured, I would say. The good example of that would be Switzerland. They have negative interest rates and they have a huge capital inflow. So I don't think that always this plays that way, that if you have higher interest rates, this will attract more capital. Rather, I think that in the uncertain time, people will also look at the credit situation, but also on the asset quality, which is the most important, in my opinion. But as I said, I am not a central banker anymore.
Well, we're in the realm of opinion. So a second question that was emailed, and it came from Paul O'Brien. And Paul O'Brien formerly was the chief strategist for the Abu Dhabi Sovereign Wealth Fund, and he is back in the United States. And he sent a note and he said, while we think about the debt financing in dollar and euro and yen and the G7 currencies, isn't there a possibility of formation of ruble finance from those who are allied with Russia? And they might become a source of buying Russian debt or other related parties' debt if we're dividing the world from what used to be to something new?
Well, I think that it would be great to address that question to the audience, because there are a lot of market experts that they can also answer that question. Well, definitely, if you ask me, the world that we know is over. And we have to be prepared for the new trends globally, given the dominance of how the world has changed over decades. And now we have the dominance of China as a second largest player at the globe. So I am not sure if the next, let's say, the reserve currency would be ruble, or rather we will have the strengthening of yuan or Chinese currency given that situation. So I am not sure if this will strengthen ruble or rather this will be the opposite.
Thank you. We have in the room Richard Miller, retired in Sarasota. In his former life at Prudential Insurance Company in Newark, I should say, to paraphrase the show of Hamilton, he was in the room where it happened. And I asked Richard earlier if one might do something like talk about what would happen in the room where it happened, were he in his old position at Prudential, and we would have this outbreak. And two, I think Richard has a question. So he's got 2 minutes for each, or less.
Thank you, Dave. Thank you, David. I want to thank David and the other organizers for putting this timely and stimulating conference together. I'm reminded, before I answer your two questions or pose, that it's almost precisely 25 months ago that I came to your conference here on Investor Day, and you greeted me at the door wearing a blue surgical mask. And it was the first time I'd seen anyone wearing a blue surgical mask at an event like this. And you said, you know, in your inimical style, there's something going on in China. And everybody in this room has flown on a plane. And if you like a mask, you had a box of masks available for everybody. It was prescient. Scary prescient. And that was my first encounter with COVID. And for many people in that room, I suspect it was the same. And now we find ourselves 25 months later, having lived through and living through what is probably the most extraordinary historical moments in our lifetime in respect of the word that is in your activities of the Global Interdependence Center. Interdependence being the operative word. It's demonstrated these last 25 months how interdependent we really are on each other as human beings, as countries, and politically, and it's being underscored every day by what's happening in the Ukraine. In the room, just to break that train of thought for a second, I'll come back to it. In the room where it happens, when crises like these emerge, in my experience back in the crisis that David's referring to in my professional life, was the Lehman bankruptcy, which to me and in my life, that this crisis we're living through now and the crisis of 2008, 2009 were the most dramatic crises that I ever experienced. And in the room where it happened in that case, people anticipated the potential for a Lehman bankruptcy at the highest levels of Prudential, at the top of the rock. We had meetings where we worked on scenarios to anticipate it and what our moves would be in the markets. And I know people in this room are very concerned about the markets. So we had a battle plan. And we executed on that plan at the highest levels. We did very well coming through it all. And everybody was very cool, calm, and collected. There was no sense of panic. Nobody was pulling their hair out. We had a very large exposure to Lehman, but actually we were holding Lehman's cash collateral to the extent of $500 million. We still had exposure to them. Markets are volatile every day, but we got out of the positions and life went on. Then, of course, all the other stuff began to happen with, AIG and the banks and all the fallout of the Lehman crisis. And we worked our way through that as well. But the important thing that David gets at is in the room where it happens, you need to be cool, calm, and collected. Okay, so take that. Now I go back to the question for our participants here. The name of this conference is Ukraine, What Next? With the subtitle Financial and Economic Impacts. But let's, if I may, broaden the question to what's next in any respect, not just financial. And ask our panelists, what keeps you up at night when you think about what's happening right now in the world as we face what's going on. That's my question.
Thank you, Richard. Kasia, what keeps you up at night?
First, I would say every day before I go to bed, and the first thing when I check Twitter in the morning is whether still there is fight in Ukraine, whether they still survive. So what will be the bad news that they will be defeated? So definitely it keeps me all the day and night awake. And the second would be inflation. I'm so concerned about inflation. I remember when Peter asked us a few months ago about, in a survey, what is the biggest concern? And I answered, yes, inflation will be on the rise, and this will be a steep increase, and they will stay for longer. So I'm very much concerned about the decade of relatively high persistent inflation.
Thank you. Thank you. I'm going to go back to taking a question from our audio Zoom audience. So it goes something like this, if I can restate it. So with environmental disasters and other threats going on around the world, if we focus a little bit on fertile soil, water, clean air, have these issues in the Ukraine and in Europe and elsewhere been part of any discussion about the recovery for Ukraine or for Europe or other parts of the world? Have the environmental or climate change issues been included?
The answer is absolutely yes. So even during the pandemic, when we started conversation in Europe about post-pandemic world, it was building green and resilient economies. This was the most important. We had the Green Fund established with a green recovery fund with a lot of investments going around environmental and climate issues, including energy transition. So definitely this war will also speed up the entire process. So not only for European Union countries, but including Ukraine, this is a very timely discussion, and it has to be included to the recovery phase, because, as I said, they can leapfrog based on the new technologies and so on when they will reconstruct going forward energy sector. They can use the newest technology and to build a greener economy going forward.
Peter, we have 3 questions in the audience, and we're up against a bit of a clock. So if it's all right with you, may I get around the room in here? Okay, thanks. So I see Christine Schlesinger, whose family's origins are from Ukraine.
Right. So
Please.
that's actually why I wanted the microphone. I'm Christine Holovata Schlesinger, and my parents lost everything in the World War, and emigrated through Poland, as so many are now again doing. First of all, I want to thank the beautiful people of Poland. And neighboring countries who have also welcomed Ukrainians. I want to know, how can we Americans help those Polish citizens and Moldovan and Slovak citizens who have been so generous?
Thank you very much, Christine, for your question and for your nice words. I very much appreciate that. I'm very proud of Polish citizens. I have many friends that they host refugees in their homes. So I'm so proud of them. And how the world can help. Of course, there are a lot of initiatives. There are a lot of trust funds that could be financed to support refugees, to support Polish families that they are hosting. Well, I don't even have one or two solutions, because there are a lot of different accounts and actions via the humanitarian, Red Cross, and other. Definitely, there are many. I can provide that offline if you are if you are interested too.
Thank you. We have time for two more. So Chancellor Holbrook and General Gray.
Thank you. First of all, thank you for your really excellent comments. Thinking about this, it's been weeks, only a few weeks, to almost destroy a nation. How many years do you think it will take? And how long do you think we'll have to be connected, and we all will have to be, to build back this wonderful country?
Well, there is no answer to that. First of all, we don't know what would be the next stage of the war. Whether we will see the end of the war soon or not. Whether the country will be completely destroyed or not. You have seen all pictures from Mariupol, which is completely damaged, bombarded to the ground zero. I can only tell you that Warsaw, that was my capital city, my home city, was completely damaged during the Second World War, which was more than 70 years ago, and this is still rebuilding. So we still have buildings that remembered bombardments and damage. We received a lot of support from European Union for reconstruction, for the cultural heritage, because we couldn't do it by ourselves. So definitely it will take decades.
Last question from General Gray. Scott?
Well, first of all, I'd like to say thank Katarzyna for her really tremendously sobering presentation there. You mentioned the Marshall Plan. I think this is what it's going to take to rebuild the country, is something along that. And it's time for the UN to step up and take the lead on something like this, I think. You also mentioned the lack of humanitarian refugee camps. If this continues to go, we will have huge problems here and massive refugee camps, which gets me to the 24th of May, where we're going to be talking specifically on humanitarian issues. And I'm going to try and bring in a Department of Defense expert on how you build these refugee camps, such as we had to after the Afghanistan withdrawal. But I want to sum up something, because today has really hit home. And I think we need to start looking at Putin a little differently. Putin is not a dumb man. He took control of a country. He's maintained control. So in some ways, he's absolutely a brilliant man in those respects, okay? But right now, don't forget what General Breedlove said in our first presentation. Putin has said the worst calamity, I'm paraphrasing, that's ever happened to the Russian people is the loss of the USSR, all right? So right now, today, we know that's his goal, restore the Warsaw Pact, if you will. We are playing, the world is playing chess with a war criminal who has nothing to lose. And we now need to start thinking like that. And I want to go back to your point, because what you said just really struck home. What's next? I want to rephrase that. In my opinion, it's not what, it's who is next and what is next. Because Putin has already said, if Sweden or Finland try to join NATO, which General Breedlove said would be fast-tracked. He's already said they are next. So he's not going to stop, and we need to start thinking about him differently. He is, in the eyes of the world, and I predict will be condemned by the world court as a world criminal, as a war criminal, with nothing to lose. What's to stop him?
We are about to finish what has been a very strong, cobbled together in a matter of weeks, morning on finance, economics, markets, and this remarkable shock, which is unprecedented in financial global history. And I need to thank the panelists that have been with us all day, and certainly thank the GIC's College of Central Bankers and its chair, Peter Gold, and our wonderful keynote speaker, who unfortunately was not able to come and be here in person, although she tried and we spoke about it. And so, Kasia, when the opportunity presents itself, we would welcome you here in Sarasota and love to have you visit us in person. Let me close with a couple of comments. On May 4th, Russia will default on $40 billion in credit default swaps. That's the largest credit default swap default ever. There's a controversy about the payment mechanism. We do not know how this all plays out. Scott and I have been discussing the need for continuing dialogue because we're facing something that is probably with us for years in its aftermath. And so when this series with USF, which started only a few weeks ago, is over, we're going to plan to try to continue it. And those who can't see her, Karen Holbrook is sitting there nodding her head with a yes. So I suspect we'll be able to come back to this auditorium. I wrote a piece yesterday on Russia default. It's available to anybody in the auditorium sitting on a counter, and anyone else who's listening can obtain it on Cumberland's website. Let me close with just one note. I'm working on my 5th book. It's in its first draft of a manuscript now, and it looks at pandemics, epidemics, throughout 3,500 years of history. And it looks at the economic shocks that come out of such things. And two things are striking. The shocks that come after pandemics are different from other shocks. This was triggered by a study done at the Federal Reserve Bank at San Francisco in 2020. And there's a working paper by 3 folks who did some very serious research on 19 pandemics over 700 years, starting with the Black Death in Europe. What I'm trying to do is extend their wonderful, brilliant work to more of history. So it's been quite a journey in the last 6 months or so. The observation I would share is in putting together the book, there's another observation. Every pandemic has a link to war. Every pandemic in history either preceded, was coincident with, or followed very quickly war. Scott last night was talking about cyber war, which we're going to talk about, and how cyber attacks reduce the capacity of water and sewer plants and therefore trigger disease. That's a military application of this issue. In preparation for my book, I looked at pandemics, the first one. The first epidemic of which there's a written record is 3,500 years ago in Megiddo. Some of us would think of that as the site of the Armageddon in biblical terms. And in that, in Megiddo, there was a king, a regional king. And that was a time when all jurisdiction in the world was Egyptian. And he inscribed a cuneiform plate, and he sent it to the Pharaoh. And he said, I need soldiers because I'm losing so many because of the plague. 3,500 years ago, first written record of the word plague. When Sparta and Athens were at war in the Peloponnesian War, Sparta launched the attack on Athens. A year later, the plague broke out in Athens, killed a third of the population, decimated the Athenian city-state defense, and Sparta won the war. Why didn't Sparta experience the same impact from the same disease at the time? Because in those days, wars were fought seasonally. And it just so happens, by coincidence, that there was social distancing between Sparta and Athens. So the plague devastated Athens, but it didn't spread to Sparta because it was in the seasonal period when you couldn't move chariots around in mud. And we just saw a tank battle change because of mud. So this remarkable history, let me end with one fact. The IHME at the University of Washington is probably as fine a source in factoring pandemic COVID-related excess deaths. And they have models, like so many of us here and in this room. We use models to make estimates. And we get close. The only thing we know about our forecasts when we make them is they're wrong. The idea is to get close. So the IHME has a model of every country in the world, every state in the United States, frankly, every county. Russia has stopped for months reporting COVID death statistics. They repeat the statistics. If you use the IHME model, which is a 6-factor model, it adds in both the good and the bad. People wear masks, they don't get as much flu, not as many die of flu. People don't wear masks, there's more flu deaths because they're not protecting themselves. IHME doesn't tell you to wear a mask or not wear a mask. It says, here are the statistics and here's how we put them together, the good and the bad. When you look at the IHME estimates over the last 9 months, the highest per capita death rate of major countries is Russia from COVID. 4 times the released numbers. So you have to stop and ask yourself, do we see the results that were repeated in history without an exception? Spanish flu, World War I, where did it spread? Think about that history. And so I don't know where this goes. None of us have a forecast. What we do know is we are in remarkable times. Not any one of us in this room 3 years ago would have been able to predict we would be standing here today having this discussion. So thank you to the Global Interdependence Center. Cumberland is proud to support it. And there are members of GIC in this room. And anyone who isn't a member, it's, I don't know, it's $100 a year or $200 a year. We'd love to have you. Thank you to the University of South Florida. It's 25 months, Richard reminds me, since I had a mask on and stood here. Thank you, Karen. And to my new best friend, Scott, thank you very much.